Have you noticed how some cars just sit around on the dealer lot month after month? There's a reason for that. Right now, dealers are in a rush to get rid of certain cars ASAP. They're literally stacking up on lots, and they'll do almost anything to get these cars sold. You might be wondering, why would they want to dump these cars so badly? Well, it's all about inventory. Some models are just overstocked, while others aren't meeting expectations. In some cases, new versions or competitors have made these models harder to sell. Dealers need space, so they're practically begging buyers to take these cars off their hands. Today, I'm breaking down 19 cars that dealers are trying to sell as fast as possible, from popular brands like Nissan, Ford, and Toyota to luxury names like BMW and Audi. There's something here for everyone. So if you're thinking about a new car or just curious about what's really going on, you're in the right place. Stay tuned, because you might just find a great deal on a car that's perfect for you. Let's dive in and see which cars dealers are practically giving away. First up is the Nissan Rogue. This used to be Nissan's top seller, but now it's facing some serious challenges. Over 100,000 unsold 2024 Rogues are sitting at dealerships right now with a 120-day supply. That's a big problem in the car world. So what happened? Well, the Rogue was a hot seller for years, but it's struggling now. Sales have dropped 10% year to date, and in Q3, the numbers plummeted by 24%. The main issue? The lack of hybrid options. As the SUV market moves toward eco-friendly electrified model, the Rogue is sticking with a traditional 1.5-liter turbocharged engine. In fact, competitors like the Toyota RAV4 are offering hybrid engines and seeing increased sale, while the Rogue is getting left behind. Buyers are now looking for more fuel-efficient, hybrid-friendly vehicles, and the Rogue is simply not keeping up. But it's not all bad news. The Rogue does still offer a smart interior, a comfortable ride, and decent performance for everyday driving. It's just that when you stack it up against competitors, the lack of a hybrid powertrain is becoming a deal breaker. With a massive oversupply sitting at dealerships, it's clear why dealers are eager to get rid of the Rogue. If you're not worried about missing out on a hybrid, it might still be worth considering. But with the market quickly moving toward more electrified options, the Rogue's future could be a little uncertain. Next, let's talk about the Hyundai Tucson. This one's been around for a while, and it's been a strong seller for Hyundai. But right now, dealerships are struggling to move them off the lots. Sales of the Tucson are down 10% this year. Even though it's a popular compact SUV, there are more than 80 days of inventory sitting unsold. That's a sign that something isn't clicking with buyers. Why? Well, for one, the Tucson doesn't stand out in the crowded SUV market as it used to. It has a decent 2.5-liter engine, but it's not as powerful as some rivals. And while it does offer some hybrid and plug-in hybrid models, they're not moving as quickly as expected. People are looking for better fuel efficiency and more tech for their money, and Tucson is facing stiff competition. The price range for a new Tucson starts at around $26,000 for the base model, and it can go up to $37,000 for the higher trims. But when you compare it to competitors like the Toyota RAV4 or the Honda CR-V, Tucson's price doesn't always justify its features, especially with the lack of a standout hybrid performance. Dealers are sitting on a lot of Tucson inventory, and they're eager to make deals. If you're in the market for a compact SUV, it's worth considering, but just know that there's a reason these cars are piling up. Next up is the Ram 1500. This truck has been a major player in the full-size market for years, but its sales are taking a hit right now. In Q3 of 2024, Ram trucks saw a big drop of 19% compared to last year. Why the decline? Competition is fierce. Ford, GMC, and Toyota are all seeing sales gains in this segment. In fact, Ford F-Series sales jumped by 4.2%, and the Toyota Tundra is up a huge 18.6%. Meanwhile, Ram trucks aren't bringing anything new to the table. Other brands are stepping up with hybrid and electric models, and Ram is falling behind in that area. Even the Chevrolet Silverado, another struggling truck, only dropped by 7.3%, which is less than Ram's decline. Starting around $37,000, the Ram 150 is still a comfortable, capable truck, but buyers want more tech and efficiency now. If Ram doesn't innovate soon, it may keep losing ground to rivals who are pushing forward with EVs and hybrids. So, if you're considering a Ram 1500, expect to see lots of incentives and discounts at dealerships. Now, let's talk about the Chrysler Pacifica. This minivan is struggling. In Q3 of 2024, Chrysler sold 1,218 Pacificas in Canada, down from 1,796 in the same period last year, marking a 33% drop. Year-to-date, only 4,211 Pacificas have sold in Canada. In the US, Stellantis, Chrysler's parent company, saw a 47% decrease in Pacifica sales. Across its brands, Stellantis sales fell 20% in Q3, dropping from 380,563 vehicles to 305,294 compared to last year. Dealers have been dealing with high prices and an excess of unsold models. Still, the Pacifica Hybrid remains one of the top-selling plug-in hybrids in the US, showing some staying power. The starting price is around $38,000, making it competitive in its category. So, if you're considering a Pacifica, keep an eye out for discounts, as dealerships aim to clear 2024 models. Next up is the Jeep. On a good note, the Jeep Compass SUV saw a massive jump in Q3 sales, surging 71% from 20,268 units in 2023 to 34,632 in 2023-2024. This growth was unexpected, especially given the limited updates for the 2024 model, mainly new wheels and a revised grille. Despite this, the Compass was Jeep's top performer, and it likely picked up some buyers from the discontinued Renegade. However, overall Jeep sales dropped by 6% in Q3, with other models like the Wrangler and Gladiator seeing declines of 14% and 35% respectively. Even the popular Grand Cherokee fell 6% in the quarter. The Wagoneer was one of the few models besides the Compass to see an increase, with sales rising 3% to 7,486 units. Year-to-date, Jeep's sales are down 19%. While the Compass success is notable, Jeep is still feeling the impact of declining demand across its lineup, similar to the struggles of other Stellantis brands. Dealers are struggling to sell the BMW i7, and it's easy to see why. This luxury electric vehicle has a starting price above $100,000, with high-end trims going over $150,000. That's a lot of money, especially when you compare it to rivals like the Mercedes EQS and Lucid Air. These models offer similar, if not better, features and range at lower prices. But it's not just the price. The i7's interior, while luxurious, has mixed reviews. Some buyers find the controls confusing, especially the climate system. Plus, BMW tried to be innovative by using upscale fabric instead of leather, but some critics feel the quality isn't as high as expected for a car in this price range. The i7 also struggles when it comes to performance. It's heavy and not as sporty as many BMW fans would expect. It's more of a comfortable cruiser than a car designed for thrilling drives. With all these factors in play, dealers are facing tough competition and struggling to move the i7 off their lots, offering discounts to attract buyers. Would you pay over $100,000 for a car that might not quite deliver the BMW experience you expect? Let me know in the comments section. Another BMW that's giving dealers a tough time is the BMW XM. It's the first M model BMW has made in years since the iconic M1, but the XM hasn't done as well as expected. Many thought it would sell well, but it hasn't. One reason for this is the XM's over-the-top style and performance. The design and power didn't connect with most buyers. Plus, it's very expensive. Dealers have even had to cut prices by up to $10,000 to sell sell it. The high price and how the XM fits into BMW's lineup are also problems. Some people think it should have been an X8, not an M model. That might have made it cheaper and more attractive to more buyers. Even though sales have improved a little, the XM is still a niche vehicle. It's unclear if it will ever be the hit BMW wanted it to be. Many buyers just don't seem to be interested in it, and its future success is uncertain. The struggles for some car brands continue, as seen with the Fiat 500e. It has faced low sales in the US, with only 439 units sold since its launch earlier this year. The 500e's limited range and high price have turned many buyers away. However, Stellantis is not giving up just yet. The company is investing $110 million to improve the 500e's performance. This includes developing a better battery and a hybrid version to be released next year. This investment is part of a larger plan to turn things around, but despite these efforts, Fiat's sales in the US have been disappointing. The brand sold only 786 cars in the first 3 quarters of 2024. This raises questions about Fiat's future in the US. Stellantis is expected to review its portfolio in the coming years. If the 500e continues to struggle, it may signal bigger issues ahead for Fiat as a whole. Next is the Ford F-150. The drop in sales for Ford's F-Series trucks in Q2 is part of a bigger picture. The company faced a 10% decline, with 200,000 units sold. This decline happened because Ford delayed the rollout of the redesigned F-150. They held back 60,000 trucks for extra quality checks. This helped avoid recalls, but hurt early sales. Despite this, Ford is optimistic. They expect sales to rise as more trucks are shipped out. The F-150 is a key part of Ford's business. In Q2, Ford saw a 1% increase in overall sales, with 37% of those sales coming from F-Series trucks. The company is also working to improve vehicle quality and reduce repair costs, which reached $4.8 billion last year. Meanwhile, the electric F-150 Lightning saw a 77% rise in sales. However, it still makes up a small share of total F-Series sales. In response to slow EV demand, Ford has cut prices and reduced production. To stay competitive, Ford is adjusting its strategy, offering lower prices on various F-150 Lightning models. The company is also focusing more on hybrid vehicles, which offer a flexible option for buyers. The Chevrolet Silverado, one of America's top-selling pickup trucks, is also facing challenges. Sales of the Silverado fell by 7.3% in the first quarter. While this decline isn't as steep as Ford's 10% drop, it signals a shift in the market. Overall, large truck sales dropped by 4%. This change in buying behavior is due to rising prices and interest rates. As costs climb, many buyers are steering away from big trucks and choosing smaller, more affordable options. The Ford Maverick, for example, saw a significant 82% increase in sales. Despite these trends, Chevrolet is still seeing strong demand for its heavy-duty Silverado models. This helps to balance out the losses in its light-duty trucks. However, the Silverado faces growing competition from other pickup trucks. The competition also comes from smaller vehicles like compact crossovers, which saw a 25% rise in sales. To remain competitive, Chevrolet will need to rethink its strategy. Focusing on more affordable options may be key in catering to today's price-conscious consumer. The shift towards smaller, budget-friendly vehicles shows the market is evolving, and Chevrolet will need to adapt quickly to meet these new demands. Toyota Highlander sales fell sharply by 47% in the first half of 2024. It sold 53,156 fewer units compared to the same period in 2023. This is a major decline for a model that typically enjoys strong demand. However, the larger Toyota Grand Highlander helped offset this loss, with 55,382 units sold in H1 2024. Many buyers seem to prefer the bigger model, showing a shift in consumer preferences. This shift may reflect broader trends in the market. Despite the Highlander's struggles, Toyota's overall sales grew by 14.7% in the first half of the year. The increase was largely driven by a 71.8% rise in sales of Toyota's electrified vehicles. This includes hybrid, plug-in hybrids, and EVs, making up 38.6% of Toyota's total sales. This success, alongside the Grand Highlander's strong performance, helped Toyota maintain its overall growth. In total, Toyota sold over 1 million vehicles in the first half of 2024, including 522,827 SUVs. But not all models performed well. The hydrogen-powered Toyota Mirai saw an 85.8% drop in sales, becoming the slowest-selling model in Toyota's lineup. This shows that while Toyota is thriving in some areas, certain models are struggling to keep up. The Honda Pilot is another car that is giving dealers trouble. The SUV saw a decline of 17.5% compared to the same period in 2023. Honda sold 49,036 Pilots in H1 2024, down from 59,433 last year. This marks a tough year for the model, which usually does well in the mid-size SUV market. Several factors contribute to the Pilot's struggles. First, there have been increasing complaints about its 3.5-liter V6 engine. Some say the engine is prone to issues and is difficult to service. This has led to frustration for both owners and mechanics alike. Additionally, the Pilot falls behind its competitors in third-row room and cargo space, which can be a deal-breaker for families needing more room. The SUV's tech offerings also seem outdated. Critics have noted that the Pilot's technology features are a half step behind other models in its class, making it less appealing to tech-savvy buyers. Another issue is the Pilot's fuel efficiency. With its 3.5-liter gasoline V6 engine, the SUV is less economical, especially in times of high fuel prices. Honda Pilot's future may depend on how well Honda adapts to these shifts. New features and redesigns could help it regain some of its market share, but for now, it's facing challenges in a crowded market. The Volkswagen ID.4 is another model that is facing challenges in the market. Sales dropped by 58% in the second quarter of 2024. The number of units sold fell from over 10,000 per quarter to just around 4,500. This decline is part of a larger trend in the EV market. A key issue is a recall that affected around 100,000 ID.4 vehicles. The recall is due to a problem with the doors. Water buildup can affect the electrical mechanisms, causing the doors to open unexpectedly. This issue led Volkswagen to pause both sales and production of the ID.4. They are working on a fix, including redesigning parts and updating the software. Production delays at Volkswagen's Chattanooga plant have also contributed to the slowdown. The company is focused on minimizing the impact on employees and resolving these issues. Despite these challenges, the ID.4 remains part of Volkswagen's long-term EV strategy. However, these setbacks highlight the hurdles the company faces in the competitive EV market. Next is the Audi Q5, a popular mid-sized luxury SUV that could not be missed in this list. In 2024, its sales dropped by 24%, with only 14,677 units sold in the third quarter. The Q5 offers a smooth, powerful driving experience with engine options that include hybrid models. Inside, it combines high-end materials and a user-friendly infotainment system. Audi's safety features and advanced driver assistance systems are also standout qualities. While Audi's overall sales in its SUV lineup, including the Q5, have dropped, the Q5 remains a key part of their portfolio. Several factors contribute to the Q5's decline. The microchip shortage has led to production cuts, creating limited supply and higher dealer markups, hence the burden on buyers. Audi also had to remove popular features like adaptive cruise control and blind spot monitoring. Reliability concerns also weigh on the Q5, with some citing lower ratings compared to competitors like the BMW X3. Additionally, early models faced issues with airbags, fuel systems, and engine failures. All these factors have contributed to the Q5's struggles in 2024. As I mentioned earlier, Jeep is facing significant challenges in 2024. Sales of the Wrangler are down by 14%, and the brand as a whole has dropped 19%. To make things worse, production has been paused on some models, including the Wrangler. Dealer lots are overflowing with unsold Jeeps, with a 4-month supply, far above the industry average of 68 days. Meanwhile, Meanwhile, Ford's Mustang is performing well. It saw a 55% increase in sales in August and is up nearly 18% year-to-date. The Mustang's refreshed design, including powerful V8 options and high-performance models, has contributed to its success. The competition, such as the Dodge Challenger and Chevrolet Camaro, has ended production, leaving the Mustang with less competition in the sports car market. Jeep's issues stem from several factors. High prices and fewer promotions have led to a shift in consumer loyalty. Many Jeep owners are trading in their vehicles for other brands, including Ford's Bronco. Dealers are in a hurry to sell Dodge vehicles. This year has been rough for Dodge's parent company, Stellantis. Stellantis saw a 27% drop in revenue for the third quarter. This happened because of fewer shipments, higher costs, and currency challenges. Stellantis earned $35.8 billion, missing what analysts expected. The situation is especially challenging in the US, where Dodge dealers face mounting inventories. Even though Stellantis managed to cut 80,000 units from US inventory between June and September, they still have large stocks. This abundance reflects weak consumer demand for Dodge models, as higher sticker prices and rising interest rates make buyers hesitant to commit. Competition is rising too, especially from Chinese EV brands. For buyers, this could mean big savings. Dealers are motivated to clear out Dodge vehicles, and buyers may be able to get deals. Also in the list is the Toyota Tundra, a solid truck, but it's struggling to sell. Rising prices and fuel costs make it hard for buyers to commit. The Tundra's large size and powerful engine appeal to some, yet not everyone wants a big gas guzzler. The Tundra's starting price is steep, around $46,000, pushing buyers to look at more affordable options. For many, paying that much for a truck is tough, especially with the cost of living up. Toyota has also been facing supply chain problems. These issues limit how fast new Tundras reach dealers. Some buyers don't want to wait months for their truck. New Tundra models have more tech features and a refreshed design, which Toyota hoped would attract buyers. However, the Tundra doesn't get great fuel economy. Many buyers today prefer trucks that save on gas or even electric trucks. The Mitsubishi Mirage is done. It won't return to the US for 2025. That means no more Mirage hatchback or Mirage G4 sedan. Both were some of the last truly cheap cars around. The 2024 Mirage started at $18,015 and the G4 sedan at $19,115. Now, only the Nissan Versa remains under $20,000, starting at $17,820. Mitsubishi confirmed the end. Production stops late this year. Dealers expect Mirage stock to last until summer 2025. This move wasn't unexpected. The Mirage had low sales and dated features. With only 78 horsepower from a 3-cylinder engine, it wasn't exactly powerful, but for years, it offered a low-cost option for budget shoppers. As the Mirage fades away, affordable new cars are becoming rare. For now, the Versa is the last sub-$20,000 car standing in the US. Lastly, the Rivian R1T is also facing challenges. Supply issues have cut production targets for Rivian's all-electric trucks and SUVs. The company now expects to produce between 47,000 and 49,000 vehicles this year, down from its previous goal of 57,000. This production cut impacts Rivian's Irvine-based plan. They haven't specified which part is in short supply, but it's affecting both pickup and SUV production. Rivian stock dropped by 3.2% on the news. This adds to a tough year for Rivian, with shares down over 50%. In the second quarter, they reported a net loss of $1.46 billion. Rivian's R1T pickup isn't cheap, starting around $70,000. Its R1S SUV starts at nearly $75,000, limiting the buyer pool. They've also paused production on Amazon vans. Although Volkswagen's recent $5 billion investment provides support, demand for EVs is uncertain. Rivian still hopes to hit positive gross profits by the end of 2024, but analysts expect challenges, with margins likely staying negative. And there you have it. These 19 cars are sitting on dealer lots, waiting for buyers to snatch them up. Don't forget to subscribe for more car insights and updates. Click on the link below to watch our video on the least reliable cars that won't even last 40,000 miles.